Coming up on Market to Market. Locked in a drought of epic proportions, California cracks down on unauthorized use of water. And a Midwestern photographer documents the critical contributions of women in agriculture. Those stories and market analysis with Sue Martin next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, July 18 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Equity markets reacted skittishly Thursday to the attack of a Malaysian airliner over Ukraine that claimed the lives of nearly 300 civilians. While those responsible for the attack are yet to be determined, the development illustrated once again the dramatic impact that geopolitical tensions can have on markets. The Dow declined about 150 points on the news, while crude oil moved $2 higher. Since Ukraine is a major wheat producer, those prices also rallied, albeit more modestly. Arguably, the biggest factor affecting grain prices these days is Mother Nature. But even as Corn Belt growers prepare for the double-edged sword of record production, persistent drought is resulting in fallow fields in the West. And in California this week, officials went after water wasters. Responding to the worst drought in 4 decades in California, state lawmakers passed dramatic legislation this week aimed at conserving the remaining supply of water. The State Water Resources Control Board authorized local agencies to fine those who waste water up to $500 a day. The regulators acted amid warnings that conditions could get worse if it doesn't rain this winter.
This year, we've got to get by with 1/3 less water in our regular supplies than normal.
Agriculture accounts for 75% of the state's water usage. Those in the Central Valley and other agricultural regions of the Golden State are seeing the devastating effects of the drought firsthand. Many fields are fallow this year as farmers look to conserve the precious resource. But state officials are concerned that the urban and suburban residents in the southern part of the state may not be fully aware of the severity of the drought, the worst since the mid-1970s. Researchers at University of California, Davis Center for Watershed Sciences say better management of existing water supplies is needed to help protect the state's $44 billion farming industry.
The problem is that California is almost uniquely in the western states of not measuring our groundwater. So we're like somebody who is so rich they don't have to balance their checkbook. We're walking around signing checks and not even balancing the checkbook because we still think we are in a groundwater-rich era.
Make no mistake, this drought is a big wake-up call.
Governor Jerry Brown is seeking a statewide reduction of 20%. But Southern California residents say they've long been conserving water. Some water districts built their own storage facilities in recent decades and are not feeling the effects of low amounts of moisture. But in May, statewide water consumption rose 1% amid voluntary conservation efforts. The growth has been driven primarily by an 8% usage increase along southern coastal communities and rural northeastern areas whose water use jumped 5%.
It really behooves all of us to figure out how to use the water that we do have as wisely as we can.
The fines announced this week will apply to wasteful outdoor uses, which include landscape watering where runoff flows onto a sidewalk, washing a vehicle without a nozzle on the hose, or hosing down sidewalks and driveways. Cities and water districts were given some latitude on implementing the fines, and the full $500 citation would apply solely to repeat offenders. The board estimates the restrictions, due to take effect in early August, could save enough water statewide to supply more than 3.5 million people for a year. The latest census of agriculture confirmed what virtually everyone in rural America already knew. The number of U.S. farms continues to decline, and demographics are shifting in the heartland. The census recorded a total of 2.1 million farms in 2012, down more than 4% from the previous tally conducted in 2007. America's farmers are getting older, even as the number of younger farmers grew slightly. Minorities increased their presence in rural America, but farm country remains overwhelmingly white, and less than 15% of U.S. farms list women as the principal operator. Anyone who's lived and worked on a farm recognizes the pivotal role played by those of the female persuasion, and one Midwestern photographer is documenting their important contributions. Laurel Bauer-Bergmeyer explains.
It is a fact that the majority of farmers in the U.S. are white males, yet a growing number of women are joining their ranks. Women currently run about 14% of the nation's farms, up from only 5% in the 1980s. A large number of those operations run primarily by women tend to be smaller and more diverse. Even though there are grain and livestock operations among them, many are part of the growing organic and local foods movements. While women have always been an important part of agriculture, photographer Margie Geiler-Alaniz felt they were mostly undocumented.
And on the 8th day, God looked down on his planned paradise and said, I need a caretaker. So God made a farmer.
Watching this commercial about American farmers during the 2013 Super Bowl inspired Geiler-Alaniz.
It was this moment where I was like, I dealt with a lot of farm imagery throughout my career, and you know, you just, whatever you see in any magazine or publication that you pick up, and you just never saw it. So I had this kind of aha moment, as silly as that might sound. I woke my husband up literally at like 2 a.m, and I was like, I know what I'm gonna do. I'm gonna start photographing women farmers, or women in agriculture, not just farmers, you know, ranchers, whatever. In all types of agriculture.
And the project Farm Her was born. Farm Her documents the important role that women play in the agriculture system. Through photography, Geiler-Alaniz captures women producers running diverse farming operations.
Every single time I am super impressed by them, I will tell you that. They have a work ethic, and they work so hard, and one thing that I will say I see every single time is that they have a passion and a love for what they do. It's hard work, day in, day out. There's no vacations, there's no breaks, you know, and so they love what they do, and I see that time and time again.
Landy McFarland Livingston is one of Geiler-Alaniz's subjects. She is a 6th-generation farmer and a 4th-generation Angus breeder. McFarland Livingston is co-owner of Hoover Angus Farm, a 400-head cattle ranch located in southern Iowa.
I really love Angus cattle. I think it's in my blood. I really do. My great-grandfather started the Angus herd 86 years ago, and you know, I've been born and raised in it. I love the lifestyle. I love the genetics. I love the EPDs, what are expected progeny differences that help us make better beef, and I just love that. I love looking out on a pasture of cows and seeing them be happy, and so it's in my blood. I love it. Well, come here, girls.
McFarland Livingston's operation sells Angus genetics worldwide. It is one of the oldest purebred Angus herds in the nation, and she is proud to be part of Farm Her to showcase that.
Margie's images that I've seen of me are really, they're things that I wouldn't have expected. I mean, I know I do my chores every day, and she took pictures of me just doing my chores, going about my business. But she has a really unique ability to capture things. And when I looked at those pictures, I was like, wow, that is pretty cool, you know, and that's pretty cool for the consumer to see the things that we do on a daily basis that we don't even think about. I don't even think about. But they're part of what we do.
1, 2, 3. You know, that works sometimes. That's a girl.
Lois Reichert is another of Geiler-Alaniz's subjects. She's been running a dairy goat operation in rural Knoxville, Iowa for more than 8 years. Reichert's small herd of nearly 15 head is made up primarily of La Mancha goats.
Their personalities. They are each has a very individual and fun personality. They're I like to say they're a combination between dogs and cats. They have the independence of cats, but the friendliness and most of the time desire to please of dogs. They're just fun, they're loving. I don't know, I still, every day, the most satisfaction I get in my day is looking out and looking at my healthy, happy animals. I don't know why, it just does something for me.
Reichert makes and sells cheeses from the goat milk her animals produce. She sells most of her cheese at the Des Moines Farmers Market, but also ships a weekly supply to a distributor in Chicago. While it was hard being photographed at first, Reichert says Guyler Alanese is good at putting a person at ease.
It was really embarrassing at first, because especially the great big picture of my face. What I really loved were the images she captured of what I do, of the goats, and like I told her, the brushes and the things like that. I was blown away the first time I saw her pictures. They were not at all what I expected. So after the initial embarrassment, it's really been delightful, because it's like I explained to people that this captures who I really am and what I do.
Guyler Alanese says Farm Her also gives women a voice. Many people who visit the website communicate with one another.
If it gives people comfort in that there's others out there doing what they're doing, I hear that all the time, that it's living in a rural area and working by yourself is isolating, and so seeing those other women or having that connection to them just visually is a sense of community.
Having begun in 2013, Farm Her is still in its infancy. To date, Guyler Alanese has photographed 32 women farmers, mostly in Iowa and the Midwest. In the future, she hopes to travel nationwide into other countries to profile many more women.
I feel personally that from a photographer standpoint, that I'm so happy with how they're turning out, and I feel like they're actually showing what I see, or what you would see when you're on a farm. I think they show that, and so that makes me excited. Every time I take more pictures and look at them, I'm like, yay, this is what I wanted to have happen.
For Market to Market, I'm Laurel Bauer-Bergmeyer.
Next, the Market to Market report.
Grain markets were mixed this week as wheat prices bounced back from last week's plunge. For the week, September wheat gained 6 cents, while the nearby corn contract moved 6 cents lower. Soybeans also declined as the August contract gave up 19 cents. Nearby meal prices followed suit with a loss of $7.50 per ton. In the softs, cotton declined for the fourth consecutive week as the December contract lost 38 cents per hundredweight. In the dairy market, August Class 3 milk gained 61 cents, while the deferred contract moved 14 cents higher. Over in livestock, cattle prices recovered a portion of last week's losses as the August contract gained $2.50. August feeders advanced by $1.28, but the August lean hog contract lost $1.60. In the financials, the euro gained 8 basis points against the dollar. Crude oil advanced by $2.30 per barrel. COMEX gold declined by $28 per ounce, and the Goldman Sachs Commodity Index lost just over 1 point to settle at 630.5. Here now to lend us her insight on these and other trends is one of our regular market analysts, Sue Martin. Sue, welcome back.
Thank you, Mike.
We saw a bit of a rebound in the wheat market this week, of course, with the turmoil in the Ukraine. Have we put a low in the market, do you think?
Well, I think the wheat market it might still fall another 20 cents, something like that. It's been stabilizing here. It's kind of congested the past week. And then, of course, the news out of the Ukraine gave a sharp outside range day, key reversal potential. And then today, we turned around and took a chunk of that all away. And, it'll be interesting because it's an inside range day. So if we're putting a low in here, then we need to see it within the next 2 trading sessions, maybe put in and start to reverse and come back up again. Taking out the high of Thursday should be very positive for wheat and denote that we're kind of pulling the hedge pressure off, over 85% of the crops harvested. And even though yields are getting better the further north they go, We have to realize that there is an El Nino coming. It may be a moderate one, but usually El Nino means that grain prices, or not grain prices, but grain production elsewhere in the world sometimes tends to bite the dust a little bit. And you've already got, while they're saying Australia is looking good at the moment, they're liquidating cattle, and that has to make you question, why are they liquidating cattle when they're in a second-year drought? How is the wheat then? Is it really as good as they say?
All right, so as we take a look for producers out there wrapping up harvest, advice for marketing.
Well, for now, I'm going to tell them to try to hold off from making sales because the market has evaporated so much. The last time I was on the show, I thought we could still go maybe and try for $9 wheat, and we were hanging up around $8.50. Nothing wrong with $8.50, obviously, now, but the problem is, at the time, we were adding in stocks of corn and wheat globally in the reports, and all of a sudden the focus started to shift away, and we started going back towards supply, also looking at demand side of things, saying that the U.S. was priced a little too high for global markets, and therefore we were losing our demand. We had priced ourselves out. And so now we're too cheap, we're getting too cheap. And so I think, if nothing else, there'll be something, even if we don't turn and go back up to the highs, there should be a nice little rally coming this fall. And I would think that producers will get a better chance to sell it down the road here than where we are today.
All right. As we take a look over at the corn market, last time you were on, you were very bullish on corn usage as we look to the future.
Mike, I was bullish everything.
And we've seen corn drop a little bit since the last time you were on.
Yeah.
Do you still think there's a pretty bright future for demand? We've got a question from one of our Twitter followers, Wayne, near Shelby, Iowa. He says, assuming good crops this year and a slow building demand, will we have low grain prices for 2014, 2015, do you think?
Well, I had always been of the opinion that 2014 would have a chance for some rally, and then we would benefit ourselves in the fall with El Nino, with a wet fall, gratify subsoil moisture, and then turn around and break in 2015. So we tried the effort, couldn't hang on to it. We're declining in prices. I think that what we're going to see is if I'm right about the El Nino, that it comes in and it hits us more in towards fall, and we have a wet fall, and problems occur around the world, then I think what could happen is we could have a more volatile market here over the next 2 years. So you could have wild swings in here. The one thing I caution producers and speculative traders on is keep in mind corn has huge, and I mean huge, gaps above the market from about 632 to about 710. And that's on a DEES contract, year in, year out DEES contract. All the market needs is a little nudge or just a little bit of a story to start it, and it'll start working that way. Have we got the story right now? No, we don't. We've got, when the USDA in May and then added to it in July or June, grew global supplies by 10 to 12 million metric tons, all of a sudden that's saying, well, you know what? You can have your little setbacks, but it isn't going to matter. And then you've got bigger acres, not bigger acres in corn so much, but big enough. And the weather, we're gratifying moisture. And so it's going to be interesting because I do think we're going towards more of a drier pattern now to finish out the season. But the problem is if the temps don't get hot with that drier, we won't really see the effect on the marketplace. It'll just ignore that until it sees the yield. So, and right now, I would say we probably have priced in a 170 bushel per acre yield. Does that mean corn can't go lower? No, it certainly can go lower, and it could try to ebb down to the 370 level. 377 to 75 area was kind of a support shelf going clear back to 2012 every low. There was a channel line there of support. But if you break that, you could sink even more and probably look for 340, 350. Some are thinking 308, and there's even some people talking a 2. Well, if you talk a 2, I don't see a 2 in corn. I think it's too cheap. We're feeding livestock heavier, especially hogs. They came in 13.5 pounds heavier this week than a week ago, or a year ago, I should say. And so, you're finding use for all this corn. One thing that concerns me for corn usage is in the ethanol industry. We've already seen where a few ethanol plants have started to take in or bring in sugar beets because the government has incentives to do that. And that's at the expense of corn in those areas. And this is happening in areas where it's all corn production, not sugar beet production.
So something to keep an eye out as we look into this next year.
Exactly. That could be a bad thing.
Well, now let's jump over and talk soybeans. There's a bearish story to be written there with 84 million acres. Do you think we're going to continue to slide in the new crop soybean pricing?
I do. I think that the bean market is, it's had a hard break. It's had a hefty break. The one thing that nobody's talking about that showed up in this last report here this month was we noticed that the foreign production deficits, which means you take the U.S. out of the picture and see how well the rest of the world produces, and it kind of gives us a cue as to how needy the rest of the world's going to be. And we noticed that on beans, their foreign production deficit increased 3.3 million metric tons. And so that means the need is a little bit greater. Of course, you've got Brazil saying they're going to ramp it up again this year, and they probably will. It'll be interesting to see what does El Nino do to them. There's a big question mark there, but the bottom line is beans got up within about 28 cents, I think, or something like that, of the $13 mark, and actually 21 cents. And now they've broken down. 1016 is an objective off of the gap that was left on the chart. It is also a 40 quarterly month moving average. And so I think the market's headed for that. In the history, usually when the bean market on a quarterly chart goes for that, it tends to go through it. 1006 is a wave 4 count, and I would think you do that. It's very possible we go to 983 too. That would not surprise me at all. Now, having said that, we're not into August yet, and July is corn month and August is bean month. So we could have a bounce in here and kill some time and then all of a sudden roll over, because in the countryside, beans don't look as good as corn.
That's true. That's true. Now let's take a look over at the livestock market. We've seen the cattle market pull back pretty big last week and yet held its own this week. Did we put in a high, do you think, in the live cattle market?
I don't think in the fats we have. I think in the feeders we may have, at least for a while. In the fat market, you've got this week we had the cash market reach 157 to 158. You've got lean, 90% lean cow beef, basically almost right neck to neck or just under other cuts. That it's amazing. The demand is very good for lean cow beef. And then you look at the other cuts, and we really, your choice kind of ebbed higher. Select had some, or I should say choice fell back a little bit. Select came up a little bit. But we did see weights ebb a little higher this week. I think weights still maybe do that. But on the token, weather is absolutely ideal so far this summer for weight gains in animals. But all said, I think that we're not seeing the consumer step away from the beef demand, because it's interesting. The retailer raised his prices right through the 4th of July holiday. In fact, there were stores in Denver that raised $2 to $3 a pound on their ribeye steaks. You have other stores, even in central Iowa here, where they're selling ribeye steaks $7.99 a half pound, or 8-ounce steak as an 8-ounce steak, which in essence is $16 a pound. And people are buying. I think what we're going to see is the consumer is going to opt for, and it'll probably be a trend that's more healthier. Long term, it could have a real bad effect on us down the road when we get ourselves back up to where we once were. But I think they're going to opt for smaller cuts. They might go for cheaper grades, but especially smaller cuts. They won't buy that 12-ounce steak or whatever. They may go for 8 or 6, or something like that, just to get by. Certainly. Now, you mentioned on the feeder side, we may have seen a high put in there at that 218 mark we touched. What leads you to believe that could have been the high? Well, for one thing, I had a price objective of 222, and we got fairly close to that. I've had several of these wave counts, and it's been amazing to watch the market just walk through them like they were a hot knife and butter. But 222 was one. I'm watching the corn market because I think corn and feeders are kind of joined at the hip. And you do have some awful dry weather out in the western parts of where you do have cattle and pastures. And so all of a sudden you got high heat back in there again. And, who knows if they'll end up having to do some liquidation or if they'll just try to, work their way through this one with hopes that it's still going to get better in time. The one thing about the feeder market is, at some point everything has a price limit. And I guess at some point, if it would be one thing if the fat market would start to fall and break away, then that might slow the demand by the buyer of the feeder cattle. But for now, I think that feeders have reached a high. And if you come back up to around 214, 215, I would probably say put some hedges on. There's nothing wrong with these prices. And in the meantime, if you've got some $200 puts, maybe roll them up. Just kind of shore yourself up a little bit and keep your protection on. In the fat market, I think we could see December cattle go to 162, 164.
All right. Well, Sue, we're about out of time, so we will discuss the hog market in our Market Plus segment online. Okay. But I want to thank you for being with us tonight.
Thank you.
That wraps up this edition of Market to Market. But as I mentioned, Sue and I will continue our discussion and answer some of your questions in our Market Plus segment on our website. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets exclusively at the Market to Market website. And be sure to join us next week when we'll examine an online effort to educate people on the complexities of commodity trading. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.